Hi, I'm Steve Hunt. I'm a certified public accountant, and I'm the owner of College Tax Refunds, where we help recent college students and their parents claim thousands of dollars that they missed, and they don't even realize it, on their old tax returns. And I've been going through a series of 15 videos explaining 15 common, costly, critical mistakes that recent college students and other young adults and their parents make at tax time. And these mistakes are, again, they're common, they're costly, they're critical, and the people who make the mistakes don't even realize they're making them. The IRS says that every single year, 9 million Americans miss thousands of dollars on their tax returns, and those Americans do not realize they're missing the money. So I'm inviting you to learn about these mistakes so that you can avoid them on your taxes, and also to have your old tax returns checked, because you may not be aware that you missed money on those old taxes. So in this video, I'm going to explain another one of these critical mistakes, and I'm going to invite you to have your old taxes checked and explain to you how you can get those fixed to get money back on your old taxes if you actually did make one of these mistakes. This is the 14th mistake that I'm talking about. It is not earning enough money to qualify for the biggest refundable tax credits. So I talked about refundable tax credits in a previous video. It's this idea that you can get money back from the government that you didn't even pay to the IRS. See, if you had earned during the last couple of years only $1,000 or $2,000 during the year from just a part-time job, it's very possible that you didn't even pay any money at all to the federal government, to the IRS, for taxes. And yet, you can still qualify for thousands of dollars back that you didn't pay from the federal government, from the IRS. Those are called refundable credits. They're tax credits that give you a refund that's more than you paid to the IRS. So, the mistake, though, is earning too little. You see, you may be aware that there's a target income range to get the biggest tax refund. In other words, there are these refundable credits that I'm going to talk about that you may be aware that if you earn too much money, you won't qualify for the refundable credits. If you earn more than, say, $160,000 or $180,000, whatever, if you're married, then you are not able to claim the education credits. You may be aware that if you earn more than $400,000 a year, you're not able to claim the additional child tax credit for having children. If you earn more than $40,000 or so, it's hard to claim any amount, or you're not able to claim the earned income credit. So we know that earning too much money makes it so that we have to pay more in taxes, and we don't qualify for very valuable tax credits. But did you know that there's a lower end to these ranges as well? In other words, if you earn too little money, you will not qualify for some of these credits. See, most people would assume that earning $0 is the best amount of money to earn for taxes, to avoid taxes. But if that's your assumption, you'd be wrong. It's actually better to make some money during the year. The IRS wants you to earn money, and I'll correct that and say actually Congress wants you to earn money, and Congress is the one who writes the tax laws, and so they've made it so that you have a better refund, some bigger refundable credits, and you get a bigger check from the IRS if you've earned some money than if you've earned no money at all during the year. If you earn a little bit, they're going to pay you more. Refundable tax credits allow you to take money from the IRS that you didn't even pay to them as long as you earned a little bit of money. There's the earned income tax credit, for example, that pays you if you had some earned income. And so obviously if you had no earned income, you didn't have a job, you didn't have a business that you were running, then you're not going to qualify for this extremely valuable credit. And so it would be a mistake to earn no money at all during the year. There's also the additional child tax credit, which is paid to families who have children. And again, if you have no earned income and you didn't have a job, you're not going to get any additional child tax credit. And then there's the American Opportunity Tax Credit, which is the credit that I've talked about in several other videos. It's an education credit that's extremely valuable. It's for recent college students, those who have tuition. And again, if you had no earned income during the year, you're not going to qualify for the American Opportunity Tax Credit. Now, as a student, you may want to have a job then, even if your parents or your scholarships or Pell Grants are covering all of your tuition. I know several students just focus on their education and don't have a job. But the fact is that in order to get the biggest tax refund, it may be wise to have a job, just a really part-time job that doesn't work you to death, doesn't mean that you're going to get behind on your homework or anything, but you earn a couple $1,000s during the year so that you make sure you get the biggest tax refund possible. Hitting the sweet spot, or the target income amount that I'm going to show on the next slide, might be worth up to $8,000 in additional refundable tax credits. That means the IRS might send you a check for $8,000 if you can hit the sweet spot in some of these cases. But don't let the tax tail wag the dog. That's a great saying that means don't let that tail of trying to hit the right tax target wag the whole financial dog in your life. Don't make it so that you're holding yourself back from earning tens of thousands of dollars. You have the possibility to go, say, sell, do summer sales or something and make tens of thousands of dollars. Don't tell yourself, no, I don't want to make too much money because then I won't qualify for these refundable tax credits. Don't let the tax tail wag the dog means make decisions that are good for you financially, which almost always means go earn as much money as you can. It doesn't mean hold yourself back so that you qualify for welfare benefits or so that you qualify for extra tax credits at tax time. So don't limit your after-tax wealth. If you're able to easily earn more than $10,000 more than these ranges or brackets that I'm about to show you, go earn that $10,000 more. Okay, so only aim for the amounts that are in this bracket. If you're already going to end up about in this range anyway, then aim for the target that I'll show you on the next slide. And especially if you weren't planning to make any money at all this year, please go get a little bit of a job if you can. Find some way to serve other people, to solve their problems, to provide value to an employer or to your neighbors or something so that you can be paid and earn a little bit of money, because when you do earn a little bit of money, you're going to get a bigger tax refund, and that's going to increase your after-tax wealth, which is something I want to happen for you. So, again, the mistake here is usually people will earn too little to get the biggest refund. This is unfortunately a mistake that can't be corrected once you've made it. So I've given lots of common, costly, critical mistakes in these videos, explaining how you can avoid making the mistake, but also I've been telling you that if you have made the mistake in the past, a lot of times you can go back and fix or amend the old. In this case, if you only made $10 last year, you can't go back and make more money last year. You can't fix that. If you only made $1,000 and you should have made $7,000, you can't go back and fix it. So this is one that you want to know going forward. For this year, your approximate target income should match the numbers on this chart. Notice that I ask you first, are you single or are you married? And then I ask you, are you someone else? If you're single, are you someone else's dependent? Or are you claiming yourself? And if you're claiming yourself, is that because you're over 24 years old? You're 25, you can't be someone else's dependent? Or just because your parents just no longer claim you anymore? If you're single or if you're married, it's important to note how many children you have. And of course, if you have dependent children, then you are certainly not somebody else's dependent. There's no way that you're claiming a child as your own dependent while you are the dependent of somebody else. So if you do have dependent children, just jump to the bottom of the chart and find whether you're single or married and how many children you have, because then you'll use those numbers. And you'll notice that I say you should earn at least this much money on the left, and then you should go not over this much money on the right. Now remember, on the last slide I told you don't let the tax tail wag the dog. If you can easily get over these dollar amounts by, if you can overshoot by $10,000 or more, you've got a job that's going to pay you $10,000, $20,000, $30,000 more than these numbers, or $100,000 more than these numbers, by all means, go work that job, go earn that money. That's going to put you in a better financial position than getting these tax credits back from the government. However, if you're going to end up in this range anyway, try not to get over these numbers. Okay, try to hold yourself right about these numbers, especially when the numbers are bold and italicized and underlined. In every row, I've given you a bold, italicized, underlined number. That's the target. Notice that if you're single and you're maybe a dependent or you don't have any children or whatever, yeah, you do want to have a little bit less income than when you're married or single, than when you have children. When you have children, you're actually going to get a bigger tax refund by earning more money. So I know a lot of parents who are recent college students or young parents who don't earn a whole lot of money. They could very easily go out and get another little part-time job and earn this $18,000, $19,000, but instead they end up doing their taxes and reporting that they only earned, say, $10,000 or $14,000 or $15,000 or whatever. And see, they fell short of getting the biggest, largest tax refund they could have. If they just earned a few $1,000s more, they'd get a couple $1,000s more back on their taxes. That's like doubling your money. The point is, you thought you were working for $10, $12, $15 an hour, and you go and work a few more hours to earn a couple $1,000s more, and then the IRS gives you an extra check for a few more $1,000s. You were actually then working for like $30 an hour. You didn't even realize it. You were getting paid big bucks, some from your employer and some from the IRS. That's, again, if you target this amount of money. So if you're married and you've got one or more dependent children, the target is about $24,500. That's about $2,000 a month that you want to be earning to get the biggest tax refund. Again, if you can earn $35,000 or $50,000, go do that. But if you cannot earn that much easily, you're a student or whatever, try to earn $2,000 a month. Get the $24,500. You're going to get the biggest possible tax refund. If you're single and you have no children at all and you are older than 25 years old, you're going to get a bigger refund if you earn right about $7,000. That's where the sweet spot is. Meanwhile, even if you're married and you have no children, $7,000 is the sweet spot. That's why I put the M right there. I'm married. I have no children. I'm over 25 or older. Then $7,000 is the target amount you want to make. Meanwhile, don't go over $8,500. Don't go over $14,500 if you're married and no children, because that's when the big refund's going to really start to drop off. Again, don't let the tax tail wag the dog. So if you have any questions about this chart or whatever, please put them in the comments below or reach out to me on my website at collegetaxrefunds.com. I'd love to answer those questions. Again, the whole purpose here is to help you get the biggest refund back on your coming taxes, and you're going to do that by earning somewhere in this range, and it would be best if you can get close to the bold, italicized, and underlined numbers. Now, I want to be clear that your refund will also be affected by whether or not you earn money from a job working for somebody else, or whether you earn money from your own business, that you're self-employed. See, when you're self-employed, you pay self-employment tax, which is twice the amount of the Social Security and Medicaid that gets taken out of a paycheck if you work for someone else. So when you are self-employed, your tax return is where you pay the self-employment tax. And at the end of the day, at the end of the year, when you're doing your taxes, if you were self-employed, you're going to pay a higher amount of tax on that self-employment income than you would if you had that same amount of income and you were employed by somebody else. Still, you still want to target these numbers to get your biggest refund possible, because here's at these numbers you're going to get the refundable credits, the earned income credit, the child tax credit, and so forth, and those credits can be used to offset that self-employment tax that you're going to pay. So again, whether you're self-employed or not, you're going to want to aim for these amounts. Now, I've already said that if you made the mistake of earning too little money in previous years, you can't go back and fix that. If you only earned $5,000 last year, you can't go back and make it $19,000 last year so that you can qualify for a bigger refund. But from all of my other videos, you're probably aware that there are other mistakes you may have made on your old taxes and you do not even realize it. And you've also known from all my other videos that I'm inviting you to go to collegetaxrefunds.com. That's the business that I created to help recent college students and their parents, just like you, to check your old taxes completely free and very quickly to find out how much money you missed on your old taxes and you don't even realize you missed it. You punch in a few dollar amounts from your old tax returns from the last 3 years into the quote calculator at collegetaxrefunds.com. Just about a dozen numbers. It only takes 3 minutes if you have your old tax return with you, and you find out instantly how much money you missed on your old taxes. And then College Tax Refunds can explain to you exactly how you can get that money back. If you have any questions about it at all, I am happy to talk to you. You send me an email through the Contact Us page, or you can leave a question here in the comments down below, and I will be happy to answer your questions. I want to quickly scroll down through this College Tax Refunds page so that you'll see that on this page you can watch a video about exactly why 9 million college students and recent college students and their parents miss money on their taxes every single year to the tune of $1,300 on average, which adds up to like $4,000 almost over the course of 3 years or 4 years. I mean, it's tons of money that gets missed and people don't even realize it. Here are testimonials from several of the thousands of students we've helped to get millions of dollars back on their old taxes. Here is a IRS.gov fact sheet. It's on the IRS website explaining from the IRS why millions of parents and students miss money on their taxes every year, and that's specifically those students who receive scholarships or Pell Grants. So please try the calculator out. If you haven't already subscribed to this YouTube channel, College Tax Refunds, please subscribe so that you can get more videos explaining exactly how people miss money and so that you can avoid missing money on your taxes. I also make other videos that are to help you increase your wealth and level up your business and your financial life and try to retire early with passive income and so forth. Check out those other videos. Please like this video. Please comment. Please share this video with anybody you know who may be intentionally earning too little and they need to earn a little bit more to get bigger amounts of money on their taxes. Share it with anybody who's in college or anybody you know who has a recent college student in their family. Thanks so much for sharing. I look forward to helping you get more money back on your old taxes. Have a great day.